خلونا نسمع مع بداية هذا اليوم إلى الأستاذ عمر كريستيدس المؤسس والرئيس التنفيذي لعربنت وكلمة عن تقرير الاستثمارات.
السلام عليكم. أنا بدي أعتذر، هيدي الكلمة حاعملها بالإنجليزي بس لأنه في كتير مصطلحات وكلمات تقنية بالتقرير اللي حقدمه. إذا في أي استفسار بعدين أنا مستعد جاوب أي سؤال أو أوضح أي شيء بده توضيح. Thank you for joining us. I'm thrilled to be presenting here the first version of the ArabNet State of Tech Investing in MENA report. We have been working on this for about 2 years now, collecting all of the transactions that have been taking place in the region and compiling them into a report. We've analyzed more than 400 deals that took place over the last 3 years, totaling over $700 million of investments. We surveyed 31 investment institutions that gave us their deal flow, and we also collected data from publicly available sources, whether that's Crunchbase or whether that's AngelList or publicly announced investment deals and valuations. What you'll see here is a preliminary version of the report. It is definitely missing deals. It is not comprehensive, but I would say it is the most comprehensive collection of data that we have to date in this industry. And we hope that by putting out this report, we'll be able to get more of the investor community to participate, give us the information about the deals that are taking place, so that we can improve the quality of this report and provide better data to help create a more transparent investment and technology sector. So without further ado, the report is really divided into 2 sections. First, investors. And we surveyed 31 investors. We also collected data about deals from 51 investors, although we are aware that there are more than that. And so if you look at over the last 7 or 8 years, we've seen a tremendous growth in the number of investors. And in particular, the growth, the turning point was in about 2010, where we started to see a significant increase in the number of funds available in the region. It hasn't really grown significantly since then or picked up pace, but again, this is just first preliminary data. If we look at investors by geography, the largest concentration of investors is in the UAE. If we look actually at the 5 largest markets, being the UAE, Saudi Arabia, Egypt, Lebanon, and Jordan, those 3 make up more than 75% of the investors in the Middle East region. More than 75% of the investors reside in the top 5 countries, which really means there's very much a concentrated investment community in the Middle East region. If we look by ticket size, more than 50% of the investors in our survey were early stage investors. About a quarter of the investors each, roughly, were seed funds and accelerators. So there were plenty of seed funds and accelerators. By comparison, only 8% were angel networks. So it seems that compared to other early stage investment vehicles, there are fewer angel networks in MENA. There are also fewer growth funds. And here what we've classified as a growth fund is a dedicated venture capital growth fund, not a private equity fund and not a kind of family investment office or a corporate venture capital fund. Here we've looked specifically at those. And so those make up also quite a small sliver of the market. And the rest, the largest chunk, is actually made by venture capital funds, which we've defined as between doing $0.5 million to $7 million deals. Looking at the number of investors by ticket size over time, we don't see much of a huge change in the distribution of investors by ticket size. We do see a small increase in the number of growth funds, which does make sense. We are seeing the market mature, and as it matures and there are more deals, we have more growth funds that are needed to fund these growing startups. We can see at the same time here that early stage funds maintain more than 50% of the investor base across all 3 years. So this is something that hasn't really changed across all 3 years. If we dive deeper and look at the investor community by country, we start to look at how are these investors distributed by phase and by country, a couple of things emerge. One, a kind of noticeable lack of angel networks in the Levant area. Lebanon, Jordan, and Palestine, no angel networks were surveyed in those markets. The other thing that we see is the lack of growth funds in some of the region's largest markets, those being KSA and Egypt. We can also say here that a lot of the family offices and the private equity funds are playing the role of growth capital in these markets, but we do not have, as far as we know, dedicated growth venture capital funds in those markets. And if we look at the top three countries, those top three countries map out very closely onto the largest three economies in the Middle East region. So it does make sense, consistent with where the largest markets are. If we take the same information and plot it and look at early stage versus venture capital versus growth stage, a kind of maturity curve emerges. So we start to see here when a country has fewer investors, they're mostly made up of early stage funding. And as the country has more and more investors, we see an increasing number of venture capital and growth funds that arise in those markets, which again makes sense. Initially, we're trying to stimulate the earliest entrepreneurship at the earliest phases, and then eventually we start to see the need for venture and growth capital. That's the first part of our report. The second part, we dive into the investments. And so we did an analysis of 404 deals. And we can see here the total number of deals. One caveat is that this report is dated in October 2015, so it does not yet include the end of year data for 2015. That means that this does not include the $60 million raised by Kareen, it doesn't include the $7 million raised by Arabia Weather, and it doesn't include many deals that took place in the last quarter of the year. However, even with those numbers, we do not expect 2015 to be as large in the value of investments as 2014 was. 2014 was quite a large year, and part of that we attribute maybe to the fact that in many of the most active investors were actually raising funds earlier this year to ramp up for further investments next year. We looked at the number of investments by quarter to see if there was any clear trend line that emerged. Excuse me. However, no clear trend line emerged when looking at these numbers by quarter. We're going to continue monitoring these numbers by quarter to see if any trend lines emerge, but you can start to see, very similar to what we had in the previous slide, this peak that took place in 2014. Looking at the value of investments by quarter draws quite a different picture. And that's mainly because a few large deals in the Middle East region tend to skew the data quite heavily. So whenever you have a deal in a quarter or two deals in a quarter that are the large deals, you see a significant peak that happens in those quarters. When we break down the number of investments by geography, we notice something interesting. The UAE represents the largest share of number of deals, and that's about 120 deals, roughly speaking. We then have the four other main markets that capture the majority of investors, Jordan, Egypt, Saudi Arabia, and Lebanon, and each of those are hovering between 50 and 60 investments each. So we're talking about roughly half the number of deals that take place in the UAE. After that, we've got a cluster of countries, Tunisia, Palestine, Morocco, and the USA, where we're seeing about 10 to 20 deals. So that's even smaller portion of the entire deal flow. It is interesting to see here, we did take into account deals that were done by Arab investors in startups in Europe and the United States and in Asia. And so you'll see here, 11 were done in the US, 3 in the UK, 5 in Turkey, and deals were done as far away as Japan by Arab investors. We took this data and then we kind of ranked the countries by number of deals over the 3 years. So we could start to see how the countries were faring over time. And you could see UAE does not change its spot, number one across every single year surveyed. Number 2, Jordan, been rising in the ranks, along with Lebanon, driven potentially by Circular 331, which the central bank has dedicated $400 million to support startups in Lebanon. On the other hand, if you look down, kind of the more on the companies or the countries that have decreased their number of deals, largest one and the largest drop is in Egypt, right? And we see that drop at the very bottom. Again, lots of potential reasons for this, political, economic challenges that are taking place in the country. Some of the active investors like Sawari Ventures and iDevelopers have been a bit quieter as of late. They are raising funds, so this could also be part of the explanation for why this took place. We then took the deals in the top 5 countries, which make up the majority of the deals taking place in the region, and we looked at how that distribution changed over time. And so we can see here much more starkly the decrease in the percentage of deals taking place in Egypt, going down from about 28% to about 5%. And to a lesser extent, Saudi Arabia, dropping in the number of deals. At the same time, we have the UAE in blue and Lebanon in purple, growing quite significantly over the last couple of years, again driven by some of the factors that we already mentioned. If we look at the number of investments by ticket size, we see that the vast majority of investments are being done in the early stage. About 60 to 70% of the investments that are taking place on an annual basis are in the early stage. The growth stage deals make up still a very small percentage of the number of deals that take place in the region. This is very different from the value of deals, because those small number of growth capital deals, they actually capture the vast majority of the value that is being invested in the region. Almost 75% of the dollars that are going into startups in the Middle East are going into growth stage companies. Now, again, this does make sense. The growth stage companies need more capital to fund growth. But this kind of gives you that very clearly and very starkly. And especially in 2013 and 2014, this was driven by some significant deals in Jumia, in Namshi, in Souk.com, and in a couple of others. We tried to categorize the number of investments by business model. This was a little bit challenging because a lot of the deals or a lot of the startups have hybrid business models or multiple business models. Well, we did try to break it down. Transactional, they're mostly commerce businesses. Media, mostly advertising or subscription-driven content businesses. Technology, those are hardware or algorithmic software businesses. Software or SaaS, these are kind of productivity software, subscription software businesses. And the distinction between software SaaS and technology software is kind of, the technology software would be things like tools for developers or technology tools, as opposed to productivity tools in software and SaaS. An agency, where it's more of a service business model priced on a kind of a rate card. You'll see that between transactional and media, those take up the lion's share in the region, about 30% each. And then if we look at technology and software, those are about half, which is about 15% each. I'm giving you rounded numbers because I believe that these are really indicative of the size of what's going on, right? So 30% for media transaction, 17% for software SaaS, and a very small sliver for agency type businesses. If we look at the value of the businesses, yet again we see transactional eating up a ton of the dollars invested in the region. Again, not surprising, some of the largest businesses that are succeeding in the region are transactional business models. Media, while it was the second largest business model here, 27% of deals, they only capture 9% of the value. So actually investments in media business models tend to be relatively smaller than the investments in the e-commerce models that we're seeing earlier. And you can see that more clearly here. We've actually put next to each other the value and number of deals that took place. So you can see that transactional and technology deals were averaging around $2.5–3 million per deal. And again, this is indicative because we've already said the majority of the value is being driven by a few large investments, right? but it does still give you a sense of how much on average per deal. Transactional technology, $2.5 to $3 million per deal, versus media software, we're talking about $500,000 per deal on average investment. If we look at the number of investments by business model, we don't really see a clear and consistent trend line emerge. One thing that I would note here, though, is the increasing interest in the technology business model. So here we're talking about smart hardware and algorithmic businesses. And those have grown steadily from 11 to 13 to 19%. And this could certainly be driven by it's easier to create smart hardware, increasing investor interest in Internet of Things, in smart hardware in the Middle East region. And we can see that here in those investments. Value of investments over the time, again, driven mostly by transactional deals, mostly by the large deals that we've already talked about. In 2015, Little Bits captured 43%, or captured a large chunk here, which is why technology jumped so quickly between 2014 and 2015. The last thing is, there's a lot of discussion in the global technology industry about women as founders, women as co-founders in startups. Of all the companies of all the deals that we looked at, women represent about 12% of the total number of co-founders in all of the venture-backed startups that we studied in this report. So 12% were female. When we looked at this in a different way, we looked at, first, female founders by market. UAE captures the largest share of female founders. 38% of female founders are based in the UAE. 17% in Jordan, so that's a significant second place, followed by 8 to 10% in Lebanon, Saudi Arabia, Palestine, Egypt. So, and again, potentially consistent with the fact that in many ways the UAE is one of the more gender equal places to start and run a business. Finally, we looked at the number of value investments, comparing teams with no female founders versus teams with at least one female founder. What we saw is we have about 14% of the value of deals and about 17% of the number of deals have at least one female partner. So I would say, it'd be safe to say about 15% of the founders or 15% of the startups have a female co-founder in the region. That's it for the report. The report that you just saw here is in the magazine that you have in your booklets, in your bags. So you can check that out. We would love to get more of your data. If you feel like we're missing something, tell us, because that's only going to help make the report better. I appreciate your feedback. Please find me afterwards, and thank you for your time.